Is this a good time to buy a house, given that the market we're in? And really closely related to that is, will the rates come down soon? And I think everybody's kind of heard or seen the memes, date the rate, marry the house. And the idea behind that is that, the interest rate doesn't have to be long term. Consider it as kind of a short term thing. You're going to be in the house forever. But the rate doesn't necessarily have to be forever. And that's because rates are high right now, right? And I think that for many people, they think, well, everybody who's telling me that has something to gain, from me to date the rate, to buy right now when rates are high. And are you being cynical? No, I think you're just being a reasonably good observer of human nature. Being Crosby said in White Christmas, everybody's got a little larceny in their hearts. Or if you want a little bit higher authority, the Apostle Paul says all have sinned and fall short of the glory of God. Right? So I think you're just being a reasonably good observer of human nature when you're skeptical of everybody who has something to gain, realtors, mortgage people like myself, saying, rates are going to come down, go ahead and buy now, and you'll be fine in the future. And what I want to do here is, first of all, I want to tell you what I'm not going to do. Please don't interpret this or come away from this saying, Chris said, buy the house now because rates are going to come down. Buy the house now, counting on rates to come down in the future because you'll be able to afford it then. And that's a lock. That's going to happen. That's not what I'm going to say here. What I do want to illustrate, though, is that objectively, the market believes that. The market objectively believes that. And we can see that in pricing, and I'll illustrate that in just a minute, that there is a collective opinion in the market that is objectively demonstrable that lenders expect rates to come down in the future, and you can see it in their pricing. And so doesn't mean they're right, but it does take away that bias and show you kind of what goes behind their thinking. And I'm going to show you this buy down chart right now. This is just from this morning. I priced a $500,000 purchase or a $500,000 loan. And you can see here the par rate. What we call the par rate is when you're charging no points. The lender says, here's the rate I'll give you. And yes, you have to pay all the fees associated with that for appraisal, title, escrow, etc. There are costs involved, but we're not charging you extra to get that rate. That's the rate we're giving you today. So here you see there's no cost to get this rate. It's at 6.324. Now, what they're also saying, on any given day, you don't just get one rate. Virtually all lenders will give you the option to buy the rate down, buy the rate up, pay points. And so what they're saying is that, look, you can buy the rate down from 6.324 to 5.999. And I just picked these two different points to illustrate this concept. And they say, okay, it'll go from zero cost, but we'll charge you $1,255 in cost to buy the rate down. Now, what's remarkable about this? Well, what I want to show you, what is remarkable about this is the break-even analysis. And take a look at this here. If you have a $500,000 loan, you're at 6.324, there's no discount points, your annual interest costs are about $31,000. Now, if you buy that rate down to 5.999, they're going to charge you $1,255 in points to get the rate down from here to here. And your interest costs now, your annual interest costs go to this. So you are paying $1,255 to buy the rate down and save yourself $1,625 per year in interest. And so how long is it going to take you to recover that extra cost? 0.77. Now that's really remarkable. And that's really important because normally the average life of a loan is about 5 years. And historically, you'd see these break-even calculations. If you're going to pay points to buy down the cost, you're going to see this break-even closer to 4.5 to 5 years. Well, the bank is saying, look, we'll be happy to have you pay us an extra $1,625 to buy the rate down. And if you're in that loan just 3/4 of a year, we will have lost money on that transaction. And that's really what demonstrates the objective nature of what the market's thinking right now. Banks are collectively pricing this way. They're not charging you a whole lot to buy the rate way down. Now, a couple of things you should take away from this. First of all, know that this isn't linear. The way points work isn't always linear. So it's important for you to look at your specific situation, look at the rate sheet, look at the points buy down. Now, in this case, I might actually recommend you pay these points to buy this rate down. I think that's a bet I might be willing to take. I normally am not in favor of paying points because banks know the averages and they price based upon the averages. They don't know if they're going to make money on you or not, but they do know they're going to make money on the average, and you're betting against the house. But this is a pretty short bet. You only have to be in there 3/4 of a year and you break even. And if you end up, if the market ends up being wrong, if the banks end up being wrong, the high rates stay with us for a long time, well, then you've got this lower rate for a much longer period of time. And so pay attention to the market very specifically. Look at your own situation, price it out, and just understand that, yes, the market is objectively thinking that pricing is going to come down. Doesn't mean that it necessarily will, but I do think it lends a little more credence to the notion that, it's reasonable to at least hope for rates to come down in the near future. Thanks so much.